Sherry, why don't you just weigh in on this industrials versus tech? How long do you think the
Yeah.
outperformance continues?
Well, listen, thank you for having me. And I appreciate just a little bit of the earlier segment because we are at a moment where it feels like we're sort of, in a relitigation of the definition of civility, both domestically and internationally. And I only mention that because it's really weighing on the hearts and minds, I think, of investors. And what we want to help investors do is separate that from the fundamentals of what good investment strategies look like. And the bottom line is that every market setback presents us with a new opportunity to find great money outcomes. And in this market, we're being presented with an opportunity that we haven't seen in decades, which is to provide the stability of income to a client portfolio. And frankly, what feels like to a lot of investors an unstable world.
And having said that, what are you telling investors right now? There is a lot of uncertainty from a lot of different directions. What's the right move?
Yeah, and I think the right move is to start to unpack the S&P 500. So you mentioned industrials, and take a look at the sectors on an equal weighted basis instead of a market cap weighted basis, and step into sectors that are going to provide that leadership around dividends and increasing shareholder value, and know how to do that in a slowing growth economy. Because what we're doing now is we're flipping the lid on 20 years of a growth story with a little bit of income and pivoting now to an opportunity to have a lot of income contributing with a little bit of growth. And if investors step forward into that correctly, and that would put you into healthcare, industrials, I think stepping into some of these these extremely sold off sectors of the market present some really good value. Then investors should be able to weather this cycle that we're in, which is a cyclical setback within a broader secular long-term bull market.
Almost out of time, but if the Fed does pivot, would that signal a return to growth stocks?
Well, I think the signal will be that we should see, I think, probably a 5 to 10% pop. That's what happened this summer. This is a balanced market. So too much of a good thing can be a bad thing. And investors should be right down the middle on this market between income and growth.
Sherry, I want to thank you for your time today.